The key word here is leverage. We only have so much limited time, energy, money. So how do we leverage what we currently have to get that outsized return? I think we're all looking for that, right? How to use the least amount of time, energy, so you can spend that stuff on doing the things you love, right? And like you said, you end up doing a lot of these side hustles, side gigs. You're just doing the same thing, right? You're trading your time for money. And a lot of times you're actually trading it for less money as than being a physician. But so many of us are looking to get out of this whole physician world. And the only thing that really seems to make sense is if you're going to trade that time or you're going to trade that thing, to actually trade it for something that you can get a really outsized return for that. Otherwise, you could just be a doctor, pick up moonlighting shifts and do that sort of thing. And so I found that in real estate, that's where it's really possible.
Hello, everyone, and welcome to the podcast. I'm thrilled to have you here because my main aim is to guide you towards achieving financial and time freedom in your life. And in this episode, we're planning to be a one-stop shop for all of your needs. In other words, if you don't know anything about your finances or how you obtain financial and time freedom, or even where to start, I want to guide you there right now. And I'll be giving out a bunch of freebies as well, so stay tuned. You might be thinking, how can I accomplish this daunting task in just one episode? Well, I can't. And that's why I have Peter Kim here with me, who is the founder of Passive Income MD. So he'll help me and we will guide you to achieve this time and financial freedom in just this episode. So Peter Kim's Passive Income MD platform is an excellent resource for physicians to discover various side hustles and obtain financial independence and time freedom. Welcome, Peter.
Hey, Robbie, that's an ambitious goal, but I think we can do it. All right. So let's make it happen.
Yes, we're gonna make it happen. I'm glad you're up for the challenge.
Yeah, let's do it.
Okay, so you were on our podcast back in November 2021, episode 17. So if listeners out there, please listen to that episode. It was amazing, and Peter shared his story and all of his background. So what have you been up to since then? What have you been up to since 2021? That's like around the pandemic was still going on at that time.
It's funny because I guess at this age, it seems like time seems to fly a lot faster. I don't know if people feel like that, where time goes by really quickly. I can't believe that was back in 2021. I feel like we just talked a short time ago. I know we see each other every so often, but I mean, I guess in the same way, when I look back, I'm like, wow, a lot has changed, obviously, in the economy with the real estate markets and things like that. I've still continued to build the brand of Passive Income MD. We continue to do our conferences and courses, and those have only continued to grow in terms of the numbers of people and also the impact and the mission that we have. But we also have, with some of my partners, we've continued to grow some of this real estate syndication company called Ascent. We continue to grow that. And it's been really fun to see the growth of, people in that space who are interested in investing for passive income, for passive, invest in passive real estate. And you're a part of that world as well, too. And then all sorts of cool partnerships have happened. Again, this is an opportunity for me to come and talk to people like you. I've just met amazing people, and constantly I feel like my network is expanding. And that's where, for a lot of people that are listening to this, I feel like your network, you've heard it probably, is your net worth. And I absolutely believe that to be the case. So get out there, meet as many people as possible. You never know what's going to happen.
Great. That's excellent. And we were just at a conference recently, just a couple of weeks ago, the best ever conference hosted by Joe Fairless and Ashcroft Capital. And I saw so many people that you touched and people that you coached up, people that have invested with you, and they were so happy and pleased. And it was amazing seeing that. And I'm sure you felt that pride in affecting so many lives and helping other people achieve some kind of financial and time independence.
I mean, yeah, it's always fun to meet people in person because, you and I are doing this like recorded, it goes out to people and
Yeah.
you're going to hear some feedback from it. But there's one thing to see, it's different to see people face to face and hear their stories face to face, interact with people, get that energy between them. You guys did an amazing job. You, Vikram, Ankit, putting together this Physician Wealth Summit at the best ever conference. If people weren't part of that, they missed out. And they need to try to get into this world as much as possible. The energy was awesome. The level of quality of speakers, everything that was presented, I thought it was just an amazing time. And it was really just an honor to spend that time with you guys.
Well, I appreciate that. Thank you. All right, so let's get to it. What is the now you look at a lot of ways in achieving financial freedom, a lot of side hustles, so to speak. What is the quickest way to financial freedom?
That's something that I tried to solve when I kind of fell into the space where I got in the situation where I was at work and I was like, I've got to figure something else out. Otherwise, I don't have control of my life, my income, my time. And I felt like there had to have been other people that figured this thing out. And so I started talking to as many doctors as possible. Because again, I'm a doctor. I probably felt like I had limited time. I maybe made some good money, but you know, I felt like there must have been other people in that same situation. So I went out there to talk to people. And I will tell you, I learned about a lot of different avenues, like starting businesses, investing in all sorts of different things, startups and this kind of thing. But what I found through all that talking to people, interviewing people, that there was just there really popped out one really avenue, one roadmap for people to get that kind of cash flow that they needed to replace their income, to create that freedom as quickly as possible, and in a way that was sustainable for doctors. And that was investing in real estate. And again, it's not something that I went into it, not because, again, I was trying to, I thought this is this amazing thing. I just followed what people are doing. Like the roadmap was already there. Like people had already figured it out and it was possible. And so that's why I decided just to do it as well too.
Yeah, absolutely. And I did the same type of thing, looking at different types of opportunities, looking to work in the administration level in the hospital where we used to work. But that was still trading time for dollars. It wasn't a passive type of income that I was achieving. And I looked at various other types of investments, stocks, bonds. I played options for a while. It just like nothing seemed to make as much sense as real estate for me either. And the fact is, most millionaires have been made through real estate. It's most, or I should say, real estate has made more millionaires than any other investment, and that's just the truth. So we're gonna really focus on that as the quickest way to financial and time freedom. Because once you have financial freedom, then you can pull away and take time to do the things that you want to do. So the advantages are, and we both know this, you will take advantage of tax depreciation. It's a hard asset, so you can put your hands on it, you can kick the tires, so to speak. I already mentioned that real estate has made more millionaires than any other type of investment. And then also the great thing about real estate is you don't have to actively be involved in it. You don't have to buy your own property because that takes a lot of time and effort. And it's not wrong, obviously, and it's a great move. And a lot of people make a ton of money buying their own. But if you don't want to do that, if you rather invest in someone else's, there's a way to do that. And you discovered that yourself. How did you just talk to us about that process?
I think the key word and all of these things you mentioned, like the key word here is leverage. We only have so much limited time, energy, money. So how do we leverage what we currently have to get that outsized return? I think we're all looking for that, right? How to use the least amount of time, energy, so you can spend that stuff on doing the things you love, right? And like you said, you end up doing a lot of these side hustles, side gigs. You're just doing the same thing, right? You're trading your time for money. And a lot of times you're actually trading it for less money as than being a physician. But so many of us are looking to get out of this whole physician world. And the only thing that really seems to make sense is if you're going to trade that time or you're going to trade that thing, to actually trade it for something that you can get a really outsized return for that. Otherwise, you could just be a doctor, pick up moonlighting shifts and do that sort of thing. And so I found that in real estate, that's where it's really possible, right? It's possible to leverage not only your income because of the fact that there is just leverage or debt. So there are ways to actually buy assets or get into assets like, with bringing on the bank as a partner. So there are ways to really get outsized returns through the use of leverage and debt. The other thing is, like you mentioned, is if you don't want to do this yourself, and some people may want to do that, they want to put the time in, energy, but probably I'd say the best use of their time is doing what they're doing right now that they're good at. Income is there. And then the rest of the time, they probably want to do it doing the things they love. When it comes to real estate, you're able to leverage other people if you want, leverage their experience, their time, their network, their capital, their resources. And you're able to do that through passive real estate investing, like you mentioned, syndications or funds, where your income that you're creating as a doctor, you're able to shove that and funnel that into these passive real estate deals and let them do the work. Let them go at it. You do your due diligence up front. We could talk about due diligence later, how to make sure it's a good deal or not. But again, essentially, you're putting your money to use, right, and leveraging their time and all of that world to get the benefit that you want. And I think that's like the most powerful thing about real estate.
Absolutely. And this is a real estate podcast. So, obviously there's a little bit of bias in this field.
Slightly biased.
Yeah. Yeah. We have a little bit of that, but the fact of the matter is I would invite any of the listeners out there to share some of the experiences they've had and other ways that they have gained financial and time freedom. And we're open to any other ideas. It's just that from your experience, from my experience, I've seen it time and time again. It's just, it's real estate investing that really seems to get people away from the grind and allows them to pull back a little bit. It's just the way it is. So, so at least,
Can I add something to that? I mean,
yeah, absolutely.
You mentioned a little bit about tax benefits. Again, as high income professionals, doctors, even lawyers and all that stuff, Like, I feel like the system in a way, like at least the tax system is kind of, slanted against us in a way. Like you hear about all these other like these business people getting all these tax breaks and loopholes. And what about us, right? We end up spending our biggest expense ends up being taxes, and there really aren't really different ways and avenues for us to become a lot more tax efficient. Our time gets taxed heavily. And so what it allows, real estate allows for is us to kind of get into a whole nother world that is taxed completely differently. And I feel like the government has set this thing up, and at least real estate, in a way that is really is a set of incentives, meaning that it's not like these tax loopholes or break. I mean, it really is a set of incentives. They want you to invest in real estate. What does it do? It improves neighborhoods, improves areas, improves the standard of living, takes people out of poverty. All of these things happen. And as a benefit of that, of you investing in that, putting your hard earned money, there are tax benefits on the other side. So you get to keep more of your money from the returns that you get. And so if you couple that as a physician, you've got good income, you can funnel a lot of that into real estate, use leverage to buy big assets, create tax, to advantage investments as well. That allows for like crazy acceleration of wealth and cash flow. And I think that's what the most amazing thing is.
Yes, absolutely. And we'll talk a little bit more about taxes in a bit, but that's a great note and something very important that you should understand. That's a huge benefit. So now that we really understand that real estate's the way to go, it's really important to start your journey and knowing where you are. Because to start any journey, you have to know where you are, and then you have to know where you need to go. So my question to you is, how did you find out where you were financially and where you needed to go?
Yeah, when I started figuring out again, you can listen to my story from before, but in short, I was working, like a dog in medicine, working every fifth night. I was in the hospital doing 24-hour shifts, and I was making good income. Don't get me wrong. But when a few things happened at work and the shifts were cut and my income was cut, I started figuring out, okay, what am I going to do as a plan to not only make sure my financial situation was secure right now for my family, and I just had a kid at that time, and not only for the future, and then what is my retirement going to look like? Really was forced to be in that situation. I started literally looking at how much income do I have coming in, what are my expenses, and then what am I saving for in the future? And then I started looking at all that, and I started looking at the way I was putting in my time for that, and then really putting aside all this money for something that would come 20, 30 years down the road in terms of
Yeah.
retirement in the traditional retirement way with stocks and bonds. And I realized like this doesn't make a lot of sense for someone like me, right? I want to start enjoying life today, like meaning that I'm not willing to give up the next 20, 25, 30 years to enjoy, start enjoying life, retire off in the sunset when my health might not be there. My kids are all grown up and out of the house. I wasn't going to be healthy enough to maybe do a lot of things that I wanted to enjoy. I just recognized that the system was set up for me, that it was set up like that. And I was like, I don't want that. I actually want to start enjoying life as soon as possible. I mean, that I want to create that financial freedom. I mean, of course, financial freedom is a big goal, but maybe I wanted to buy a shift back. I wanted to work a shift less, wanted to work a couple shifts left, wanted to work part time, do all these things. And,
Right.
and in that process, I started doing the numbers and the math, and I started coming up with that number. Like you said, I make X amount right now,
Yeah.
and I have this much in expenses. So guess what? If I was able to create this much money through passive income through real estate, monthly, then it was an easy calculation. That's where my number would be, my financial freedom number or
Yeah.
independence
And
number. Yeah,
and
exactly.
I'm
That's where
gonna
it started
stop you.
from.
Yeah, I'm gonna stop you right there because this is exactly where we need to start.
Mhm.
So there is a freebie. If you look at the show notes, you will see a link to a document that states all the things that you should collect. It's not that complicated. Credit card statements, bank statements, loans, stock investments, cryptos, cash under your mattress, whatever you have, collect that, put that on a spreadsheet, understand what your net worth is. So that's really step one, guys. Calculate your net worth, know what your liquidity is, so how much cash you have on hand. And then, as Peter mentioned, calculate your expenses, right? Your income, your expenses. Don't worry about budgeting expenses at this time right now. Just go with what you have. You've got your expenses maybe for the past, 6, 12 months, whatever it may be, just average it out. So hey, look, this is my income, these are my expenses. This is the expense I need to plan for the next year or two to achieve that financial independence. And you have a number there. And the crazy thing is it's really not as much as you think. Because I did that same exercise. And for me, it was about 10,000 a month. It really wasn't that much. Just keep in mind that this is post-tax money. And that's the key Peter, that you mentioned is a lot of these distributions you're going to get are going to be post tax. If you do it right, it's going to be post tax money. So 120K post tax is all I needed to get that financial independence. So so I knew where I was, I knew where I needed to go. And the question is, how do you get there? Anything to add, Peter, to that?
No, I think that's a great roadmap. I mean, I would guess that probably 80 to 90% of people that are out there listening to this haven't done that symbol inventory.
Right.
They haven't used that spreadsheet like you said. And it's great that somebody kind of lays it out for you because sometimes we need that. We need people to kind of show us exactly what to do. And so it's awesome that you have that resource. I recommend everybody check that resource out because again, you don't know where you're starting at. And for some people, I've actually had friends who have done something very similar. We've taken a look at their expenses, taking a look at where they're at, they're like, oh, exactly like you said, it's not that much. This is
Yeah.
achievable. I can do this. And it's kind of completely shifted their mindset as to what's possible for them moving forward. So I think that's a great first step.
Excellent. So that's, that's the first step, financial freedom. Now let's shift a bit to time freedom, because this is super important. And we spoke about this before, is the importance of leveraging and delegating responsibility, right? Because there's so many things that we do that we don't really want to do, but we do because we think we have to do, or we have a responsibility to do them. So there's another link in the show notes where there's a delegation worksheet. It's a really interesting one, but it really allows you to categorize things into categories of what you're doing and love, what you're doing and you hate, what you're doing and what you aren't doing that you should be doing and love, and what you aren't doing but should be doing and hate. So you put those in categories, right? And then look at those and figure out how much it would cost to pay someone to do those things for you. So now here's an example. Say you don't like mowing the grass and taking care of the lawn, but that's something you do every week. Now it costs, say, $100 a week for somebody to do that for you. You make an investment that makes you $400 a month. That pays that for that person to do that work, and you get that time back. So that's how you can pay to get your time back. Or another way to do it, maybe to get that time back earlier, is maybe do a shift, right? You do a shift, you're going to pay that person off for, maybe multiple months to do the work that you don't like doing. So this is what I'm trying to get at. It's a simple way to figure out what you want to delegate somebody else to do. But then the other thing is valuing your time and figuring out how much your time is worth. What do you think, Peter?
Yeah, I challenge everybody out there to, when they do this process, to also try to come up with a number for what your time is actually worth. Come up with a number. And the reason you do that is because it really helps you make some of those decisions as to whether you should do some of those things in those quadrants or not. As physicians, you probably know what your number is a little bit as like an hourly pace. I mean, like an hourly rate. I would recommend you do at the very least, you should value your time at that, right? As a doctor. And I've used that in that kind of matrix that you've talked about. I use that to make a lot of decisions to kind of get rid of the things that I don't want to do. And it's freed up so much of my time. And if you can put a value on your own dollar, you feel like you're saving money in a way and saving time by doing that. I'll give you an example of that is that there's always that thing where you're going to run into that situation where you're like, I have to pay somebody that much to do that, but I could just do it myself. And you're gonna get that situation all the time. You probably jump in there, you do it. It takes longer. In fact, you could probably hire somebody for cheaper and they would do it much faster and they probably would do it much better than you. But you still do it anyways. I was reminded of that when I was putting my outdoor speaker. For some reason, somebody said they give me a price to do it. I was like, that's outrageous. I could just do it myself. 3 hours later, I hadn't even hooked up a single speaker. Things were all over the place. I was sweating. I was missing time with my family. I said, okay, forget it. This is ridiculous. And it reminded me, and I paid somebody. It got done perfectly. I enjoyed the afternoon with my kids, and I was like, I'm never going to do this again. And so hopefully you guys can go through that exercise and realize that your time is worth something. The other thing that I would recommend to people is that I think a lot of us, when it comes to time, is we try to do all the things that we love to do or that we want to do, or I think we fit it in the cracks of what time we think we have left. Meaning that I've got to work this much amount of time. I got to obviously sleep this much amount of time, and then you like fit it in within these cracks. What I would challenge people to do when they do this matrix and do all of these things, like start with a clean slate. Start with a clean slate and say, this is how I would love to spend my time intentionally. This is how much time I would love to spend with my family. This is how much time I would love to spend working. These are a time where I love to do my hobbies, leisure. This is how much time I want, in terms of sleep. And then try to build it from there. And then use all the delegation stuff to help you build that life that you ultimately want.
That's just phenomenal advice. And, another story I'll stack onto that is I made a point to spend an hour of my time with my kids after they come back from school. So I pick them up from school. We live walking distance from the school. I pick them up and I spend an hour with them. And everybody knows, my partner Vic knows, the whole Viking team knows that from 4 to 5, don't try to contact me. I'm not going to pick up the phone. I don't schedule anything during that time. And I have somebody helping me cook because that during that time I would be maybe meal prepping or doing something like that for the kids, but I have somebody helping me do that. So I really can focus on them. We have so much fun together during that 1 hour. Whereas previously I would think in my mind that, hey, my kids are really important, important part of my life. I value them so much, but I would really not be spending as much time with them as I want. I'd literally be working all the way to dinner. And then maybe, they were not really wanting to have dinner as a family. They would like jump and watch something they probably shouldn't have on their iPad or whatever. So they're not really focused during dinner. You work and then you put them to sleep, and it's just the day goes by, and what you realize during doing this process and really being focused and really being intentional about how you use your time, what you realize is you can create those gaps and you can fill those in with things that you really love to do. So this exercise is super important. You guys really need to do this. And then the second part is, how do you find someone to help you? Peter, you've done this a lot. Like what's a good resource to find help?
Obviously, it depends on the type of task, whether
Yeah.
it's like an in-person local type thing. You found somebody to help you meal prep or cook, and that's
Yeah.
obviously an in-person through your networks or care.com.
Care.com is what I used.
Yeah,
Yeah.
exactly, right?
Yeah. Yeah.
Care.com,
Care.com's good.
that sort of thing, and then if you need somebody kind of locally, sometimes you can use like a resource like Upwork. Upwork is a great place to find
Yes.
people who are just doing side kind of consulting gigs, do something for your business. And then I use a lot of virtual assistants. And virtual assistants, I actually use virtual assistants both kind of that are local, not local, but like in the United States, and I use ones abroad. I will
Okay.
tell you that, especially when you're trying to leverage your time the best and trying to do that calculation of how much time it will cost you and what your time is worth versus that, the moment you start kind of delegating these overseas, and if that's possible for something that you can, again, that's repeatable, especially something that you find yourself doing again and again and again, that you're like, I wish I could just give somebody a manual for this and they could just do it for me. Sometimes, like, booking hotels, even booking flights, these kind of things. I delegate that as much as possible to outside assistants. And these virtual assistants, there are places like onlinejobs.ph is probably a great resource for that. Fiverr overall, Fiverr. Fiverr.com is a place where these people do these small tasks at a time. You're paying these people for their time, maybe $6 to $10 an hour. And for them, it's a great living. And they're living well in their home country, just the way the conversions work. And you're paying them for it. And is your time worth a little bit more than $6 to $10 an hour? For a lot of these things, I would venture yes. And so I utilize those things to a significant degree. I probably have 8 different virtual assistants personally.
Oh, wow.
So, for different tasks and different
Yeah.
things that they do, some of them are somewhat business related, some of them are personal related. And it takes time to figure out how to use them. But the more and the quicker you jump into it, the better, and the faster you learn how to utilize them to kind of free up time in your life.
Yeah, absolutely. And then another one is TaskRabbit. I'm sure many of you
Oh,
have
great
heard
one.
of that.
Yeah.
Yeah. Yeah. If you want to get something put together, like you have furniture or whatever it may be, or moving or whatever you need, that's a really nice one to look at. I love Fiverr and Upwork. I use Fiverr and Upwork all the time. And you can actually, if you want to find gifts for people and put like or create a portrait or something like that, you can do it for incredibly inexpensive cost, and it looks amazing. So we've got
Let's not forget
yeah.
also for delegation now,
Uh,
like let's not forget AI. Like I think
yeah.
that's an important thing to mention as well too, with all of the different AI kind of programs and apps and things like that, that they're becoming a lot more useful as well in helping you cut down your time significantly, whether you have to write something, do something, create something. I mean, it's amazing that there are now, if you go out there and say, what are the 10 best AI programs to help you in your business or whatever it is, or platforms. If somebody just Googles that, like there's almost now AI programs for design, logoing, writing stuff up in terms of copy, letters, emails. Like it's amazing what you can do now through the use of AI.
Absolutely. Absolutely. That's a great tip. Okay. So now we've spoken about real estate. You've done some actions, taken some actions to create some of that time freedom. Now you've got to look at investing in real estate. So I did a entire podcast on finding a sponsor that you trust. It's the October 2019 podcast with Gary Rappaport. Please listen to that. That one's phenomenal. Gary is a local real estate owner, owns billions in assets, tons of experience, and he goes through all of that. In fact, he did several deals where he lost all of his income. He lost all his equity. The deal went bankrupt, and his investors still trust him, and his deals fill up so quickly. And he tells you how he's done it. So phenomenal story. Definitely listen to that. That's how that will be helpful in finding a sponsor. Also, you want somebody that's experienced, has been there before. I really think it's good to go with somebody that had a bad deal too, or a deal that went sideways, because so many people have done everything great, and that's awesome if you can find someone that has done everything perfectly. But if someone has been around long enough, they're going to have a deal that's gone sideways, and it's good to get their feedback on that. If you don't see that, it's not necessarily a red flag, but it's something to think about. Be like, hey, are they really looking at themselves as objectively as they should? Call references, make sure people that you're investing in are doing it right. What else, Peter? What else would you add to that for, just kind of a list of finding a good sponsor?
If you don't mind me backing up a little bit.
Yeah, sure. Go ahead.
I think when it comes to investing in real estate, there are so many ways to do it, right? There are, you can invest as, you own your own properties. You can invest as like you can be the bank and you can invest somebody else. Otherwise, you can invest in these syndications and funds and invest in basically buy shares, I would say, like almost of apartment buildings in a way. So I think what people, especially when they listen to this, is that they have to figure out what works best for them, meaning that it's a combination, every investment. Probably to get, have a successful one, you need to either have time to put into it, energy, right? In terms of like sweat equity, like put work into it, or you got to have money. And probably you got to at least have one of those. But if you have all three of those, obviously you can probably accelerate things the quickest. And so you have to do a quick inventory of your own time, energy, and money and figure out what do you have and what are you willing to do or what do you want to do? For some people who want to just like, I'm willing to do DIY, I'm willing to grind, I want to learn and, do the plumbing, take the plumbing calls myself. I want to be there and manage take all the calls and make sure construction goes okay or rehab. Like some people want to do that and that's fine. And that means that they should probably go more of the DIY active route, own your own properties, help grow your wealth through there. But a lot of us, we're busy. We're busy professionals. We have something that we're already an expert in, so we don't have to go and learn something new. Many of us probably think, okay, well, maybe we should go and find the right people who can help me get there versus I do it myself. And that's where it's kind of passive investing and syndication comes in. And so for people who are deciding or on the fence, you have to decide which one works for you. You don't have to only do one or the other. That's the funny thing too. You can actually do both, but you have to decide what's the best use of your time, your energy, and your money to get the benefit that you want, right? And still create the life that you want. And if that happens to be investing actively, go ahead and own your properties and do that because you can find a lot of success there. And there have been doctors who have done that. But you can also go the passive route, like you talked about, finding the right people. Now that becomes the big question. How do you find the right people to invest in or invest with? And that happens all the time. I get asked that. I'm sure you get asked that. I will say that everything is really based on, it's really trust. I mean, trust and your trust in that they can actually perform what they say they're going to be able to do. And how do you figure that out? You got to look at their track record. Like you mentioned, maybe they have made a mistake or two and you ask them about it and they say, like, this is what I learned from it. And this is how I now have changed things so that this doesn't happen again. And maybe they have a track record of, 3, 5, 10 years of performing for their investors. And then also talk to people in the community. Talk to people who have invested with Viking Capital, for example. See what their experience is. See how well they've done. See what kind of communication they've gotten. How are they able to talk to the sponsors and the operators? Do they feel like they get, are the people out there putting their reputation at stake? Are they meeting with people? Like there are so many ways to figure out how you can trust somebody. And I think that's really the core of all this due diligence, because at the end of the day, anybody can show you a deal. Like I promise you, everybody who's in this, probably listening to this podcast, has seen a deal come across their desk where the numbers for this one is 25% and the number for this is 15% or 17%. And you're like trying to decide, should I go with the one that's advertising higher or the one that's advertising 17 or 15%? And I will tell you, anybody can really, the numbers don't mean a whole lot by themselves. You have to understand who is the person or who is the company behind these numbers. And ultimately, can you ride with them? Can you trust them to be part of your team And that's what a lot of this due diligence is around. So that's what a lot of things that you were saying, those questions that you were asking, seeing about their track record and all that, that's what comes into play. But ultimately, trying to figure out, can I trust these people?
I've invested with multiple sponsors as well outside of Viking Capital. And I've seen all types of communication. Some of it's monthly, which I really appreciate and enjoy. Some of it is not much at all. And then I'm scratching my head like, why isn't this what's happening with this deal? You have to reach out to the sponsor and then they may or may not get back to you. I've had deals where I invested in it and it's a great deal, but the sponsor just doesn't communicate well at all. And I'm like, I'll never invest with them again because even though I did well, I didn't know what was happening during the deal. And, I don't want to continue that type of uncertainty. So yeah, Peter, that's great. That was a great overview. And these are all the things that you want to consider. I'm sure you have resource with Passive Income MD. Viking has a bunch of podcasts and resources that you can look into to really understand what it means to find a sponsor. But that's really the next step in this process is finding someone. And then, once you find one, you want to diversify, find another. Just make sure that you are comfortable and trust the people that you're investing with. And then once you have like 1, 2, or 3 sponsors, if that's the path you decide to go on and not the DIY path, but you want to get somebody else and leverage somebody else's experience and expertise, then it comes to how much you invest in that deal to get the numbers that you calculated before. So can you walk us through that, Peter? Like how did that process work for you?
Yeah, I mean, this is through a lot of trial and error, I will tell you. So I'm so glad like podcasts like this exist and resources that you give out because I think it's really important for people to share how they've done it. And,
Yeah.
we try to do that on our platform as well. Again, because this process is kind of unknown a little bit out there. Like, how do you learn how to go through I mean, it's nothing like we've probably trained for. Nobody's
Yeah.
taught us this stuff in our, in training and in medical school. But eventually you learn over a time. I mean, you find a community of people that are doing this, find a people that are learning, that are investing, try to gain as much knowledge for them, look at as many resources as you can, listen to as many podcasts as you can, and you'll start to piece these things together. You'll start learning about, a lot of it's like medicine, right? Where there's a lot of jargon. And that might seem intimidating to a lot of people when they first hear a deal or see a deal. They see these things like IRR, maybe they don't even know what that is, equity multiples, cap rates. These are some things like depreciation, you know, debt service coverage ratio. They see these things in a deal. They're like, I don't understand this at all. I will tell you that if you've been through medical school, you've been through all that stuff, I promise you, you can understand this. It's way easier than understanding physiology. Okay. So it's just a matter of just kind of sitting down for a little bit, listening, and giving yourself the patience and a little, a little bit of understanding that it just takes a little time to understand the jargon. And once you do, it's just simple math. I mean, I don't know if you feel like that too,
Yeah.
but
Yeah. 100%. It's,
it's
you
not,
just,
it's not
yeah.
calculus or anything like that. It's
Yeah, it's not super and then if you see the people that are involved in this type of space and they're doing really well, and you're like, okay, well, I can definitely, I can,
yeah.
I can do this. This is not hard. And the question also then becomes like, okay, once you get a sponsor that you like and trust, how much do you invest with them? I would say start with a small amount. Usually it's around 25,000 is the minimum investment. You might be some deals that will take less, but start with a small amount. And you can even ask the sponsor if they say 50,000 is their minimum, ask them, hey, will you accept a check for 25? A lot of them will say yes, especially the first time investors.
Mm.
And use your IRA because that money is money that depending on how old you are listening to this podcast, you're probably not going to see for a little while. And it's, quote unquote, a little safer in a way because if that cash flow stops for whatever reason, it's not going to really affect you necessarily. But start with that and see how it goes. Just get a sense of how the sponsor performs, what they're doing. And also one more point to add to this is ask a friend who's done this. Your friends are great resources. If they've had a great experience, you trust them, obviously, then you can go with that sponsor too. So, a friend that refers someone, go with that sponsor, put in some IRA money, self-directed IRA money. Again, we have podcasts on self-directed IRAs. You can learn about it, very simple, and see how it goes. See if you like them, and then progress from there. What do you think, Peter?
Yeah, no, I think that's a great tip. I think
Yeah.
that you can hear, you can see, you can be around these people, but you never know until you actually kind of jump in with someone. Like now that you jump in with them and then you can find out exactly how they operate. Again, everyone on the front end can tell you whatever they want. It always helps to have a lot of different references. Do your due diligence, but the best way that you're going to find out whether a sponsor is somebody that you want to ride with for the long term, that's going to be the vehicle that helps you get where you want to be, like you have to try them out. And so that's what I recommend as well. If there's a sponsor that seems to be a sponsor that you're like, maybe you can sit there and think about it for years. You've got to try it out. And I tried a lot. So I try a lot of sponsors, and my goal is to get, narrow that team down of just having a few sponsors that I ultimately trust, but you can't know that until you try. And so that's what I've done. Like you said, is I usually go in at a smaller amount before I decide to go a little bit bigger and all in. Whether you
Yeah.
use your self-directed IRA, I think that's a great tip. That's something that a lot of people don't do or even know that's available to them. So
Right.
that's pretty cool that happens, especially if they don't need the cash flow right now. But again, I think the best thing that people can do is ultimately try and see, and ultimately and see how they perform, and then you get a better understanding whether they gave and promised everything that they had talked about prior.
Right. So now let's give us an example. You started with a very small investment and you scaled from there. So can you tell us how that, maybe give us the 1 year starting to invest and at the end of the year, how it turned out. Give us that.
My story is actually not that unique, and I think it's kind of the same story that I hear from a lot of doctors.
Okay.
That first deal is the scariest deal you can ever imagine. It's the scariest. You're shaking when you're going to wire the funds in or this or that because there's so much uncertainty and unknown. And I think a lot of us we want to know the risk benefit ratio. We want some clarity around that. So my first deal ever in real estate, I will tell people, is a $5,000 investment. That was a debt deal where I was on the debt side. Now, meaning that I lent money out and they gave me money back at interest, my money with interest. And I thought that was a great way to get started just because it was a small amount. It's like $5,000. At the end of the day, though, I knew that it didn't have all the benefits that real estate truly might have, like the tax benefits that are available to you. It didn't have the tremendous upside that a lot of investing in like syndications might have, but it was a great way for me to get started. And so I started with that. And then I quickly jumped up to once I felt like that started working, I started seeing distributions. I jumped into a syndication, and I jumped in a syndication for about $25,000. That was my very first investment. And then again, I had some cash saved up because I was trying to do and get into more types of investments. Then quickly after that, I ended up in $100,000 fund. So I moved pretty quickly, all
Yeah.
within 1 year. And actually, some of these funds, though, I will tell you what's pretty cool about them. Some people may not know. You might actually commit 100,000, but they may not need 100,000 right away. So I
Yeah.
committed to $100,000 fund, but they only needed 20% right away. So a $20,000 fund, and then as they needed more capital, I would kind of inject more capital in there as we went. So it allowed for me to say, hey, I'm going to invest $100,000 over the next year or so, eat with you guys, someone I trust, but I don't need to give it to you all at once. And that was kind of nice about some of these fund structures. But I quickly moved because once I realized that this thing could work, meaning that I saw the way these things and investments could stack to get me where I want to be, I became like totally obsessed. And I was
Yeah.
like, okay, I'm not waiting anymore to, I could spend years just sitting
Yeah.
there and thinking about it, but there's an opportunity right now. And I feel like that opportunity is coming. Again, I was there and I started this in 2013 is when I first started investing in
Yeah.
passive real estate. And I was there when it kind of came out of the cycle. And obviously we've had a great run for the last however many years. I feel like that cycle is starting to reset again. And so for a
Yes.
lot of people that are thinking about it, like this is the time to educate yourself. This is the time to nibble at sponsors and to get to know who you want to go all in with and deeper. Like this is the perfect time actually. And so once you get that ready, so when the market is really, really moving in that right direction, you're ready to kind of go all in with confidence.
So how long did it take you to hit your goal, your goal for financial freedom? I mean, how many years? Months?
I tell people that my first goal was $20,000 a month in
Okay.
20 years. That's what it was, $20,000 a month in 20 years
So to achieve $20,000 a month in passive income in
per month.
20-year time.
In a 20-year time, that was it. It was
Okay.
pretty
Okay.
modest goal.
Okay.
I felt like it
Okay.
was achievable. That
Yeah.
meant that, and I did this reverse engineering thing where I said, that means in 10 years, I need to have $10,000 a month, just kind of staying on that linear path. And then maybe in 5 years, I would have to have $5,000 a month. And that means in the next year, the 1 year, I would need to figure out a way to create $1,000 a month in passive income. Could I do that? $12,000 a year. And I found the number that made it work. I found the sponsor and operator. I said, look, if I just kind of repeat this year after year, then I'll get to where I want to be. The cool thing about investments and all these things with the market, you not only like get better at this, your money starts to compound. You start taking advantage of tax benefits. Again, you start getting your knowledge and your network continues to expand. So I tell people it feels slow at first, but it ends up being exponential growth. I absolutely believe that. And just you hear guys smart, like guys like Charlie Munger, Warren Buffett, like majority of their net worth actually now you see it as actually in the later years as it compounded. Real estate at first is going to feel a little slow, but then this thing will accelerate really quickly. And I was lucky to meet a lot of great people. All that being said, I reached that goal within 6 years. And so I would say like truly that number that I wanted, like just from
Yeah.
real estate. I started businesses and I started
Yeah.
doing that, but I'm talking about just the real estate, pure passive
Yeah.
income. I would say it took about 5 or 6 years to get me exactly to that number. And now it only continues to kind of grow on an exponential basis.
Yeah. 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 So I mean, so that's amazing. And 5 or 6 years is what you'll find it takes for a lot of people. That number it's interesting that you say that because I hear that number over and over, like 5 to 6 years. And that's how long it took me. And so, my story is a bit different. I started investing in my own deals because I felt that that was the way to go back then. We bought a deal in DC. It was a small multi-unit, 3 units, lived in one unit, rented the other two, moved into another unit, did it again, and then bought two more. And in a period of 4 years, we were able to obtain financial freedom, hitting that 120,000 a year mark. So that was a different way to do it. But I also explored how long it would take me to do with just investing passive income. I kind of reverse engineer it like you did, Peter.
Mm.
And for me, it came to about $1 million of investment, right? Over a period of 5 years is what I was planning to do passively. That would get me to my mark. So you can think of the returns. A lot of the returns you'll see will be anywhere from, like 10 to maybe 15, 60% annualized. You'll see this number come up a lot, like an annualized return. And that doesn't mean it's realized right away. A lot of times there's a preferred return, which is, you might hear 6, 7%. And sometimes you don't even get that right away. You get like less than that and it kind of builds up. So as you start investing, you might get a little bit of those returns, but when it comes time to sell that deal, a lot of the equity comes back. And that's when you realize a lot of it, and then you can reinvest that. And that's when you will see things really kicking in. And that's where that 5 year period comes in, because the cycle of most of these syndicators, including Viking, is a 5 year underwrite. We underwrite for 5 years. We plan to sell it within that time. A lot of times it's less time than that. We sell it, we reinvest that, do an exchange, tax deferred. If you are interested in doing that, you can do that. You can talk to the sponsor about whether they do those things. And then you can get more income from that equity that you invested. You would be, like having a 20-year goal is, very conservative and, certainly doable. But as you saw, and as a lot of people see, it doesn't take that long. It's really amazing. It really doesn't.
Yeah, I mean, I was happy with that 20-year goal because it's not like I got nothing in my mind, like throughout. Your money would start to come in. And
Yeah.
as that income started to come in, I saw myself dropping shifts. And I
Yes.
think most people know exactly how much a moonlighting shift is for them or a weekend shift. If that's like the type of profession that you have, or you take off a Wednesday afternoon of your clinic, I think people know like financially what that is, if you can quantify it. And I saw myself as I moved towards that big $20,000 goal at that time. I saw it like nibbling away at it. And I realized that all along the way it would start buying my time back. I wouldn't have to wait till I was 20 years, 20 years down the road before I
Yeah.
get to enjoy it. All along the way, I'd be getting those cash distributions and that cash flow. And that's what excited me. And, fortunately things moved a lot quicker. And part of that was, finding good people. Part of it was the market as well. And so that's why I think there's a great opportunity for people coming up.
And just as you said, I mean, we're really in a great time to start doing this. Things have reset. Expectations have reset, and you're going to start seeing opportunity come out there. So really start looking for that sponsor you trust. Look for, if you want to do your own deals, start looking in markets that you really like and learning and educating yourself. Putting maybe a conservative 10-year time frame, but hitting it earlier. That's totally doable. So this was awesome, Peter. What else? Anything else you'd recommend to folks? Any other tips to get them to this point?
The way I want to think about this, and I tell people this, is that first deal is always the hardest.
Right.
And I know that people have a tough time getting over that first deal because they don't know if they're making the right decision or whether they should do this one or that one. And I've learned this to ring true in my life is that it's almost never the first deal. The first opportunity, the first thing that makes it like this life-changing thing that sets you off on this trajectory. And you might see this in the life of any entrepreneur or investor. Oftentimes it is probably somewhere like number third, fourth deal or something like that that starts to make the difference. And for you, if that's going to be for someone else out there, I'd recommend to people. And I kind of again, I motivate people and inspire people to say, hey, look, if it's going to be my third or fourth deal, that's actually going to be the one that makes the difference. Like, how can you get there quicker and faster? And the only way to do that is to take action, get through those first ones that you're going to learn a lot from. Hopefully they go well as well. But then you get to kind of, learn, gain the experience, find the right people, and ultimately get to that third or fourth deal that actually starts to make that big impact for you. So what if it was that deal for you? How quickly would you want to get there? How quickly would you want to make that investment to move forward, to make that happen? And so that's my challenge to everybody. Don't think about it on that first deal. Don't give yourself the pressure of hitting the home run on the first one. Because
Yes.
let's be honest, likely it's not going to be the first one. It's
Yeah.
going to be somewhere down the line. So what's it going to take for you to get to those?
Yeah. Even if you think it's a home run, if you're like, oh, this first initial deal looks amazing, I think invest a little bit. Like just don't go all in. Just, because you don't really know truly, maybe you don't truly understand what's happening at this point. But as you're learning, as you're developing yourself, then start putting more and more money in, and then you'll start seeing it grow and blossom. So awesome. I'm just going to summarize because Peter, I think we hit our goals and expectations for this podcast. We discussed the best way to obtain financial and time freedom is through real estate. You really want to leverage your time. You want to hire a personal assistant. We gave you a bunch of resources. So you'll have that time freedom back to start. And that time freedom you can use to educate yourself, learn about real estate, look at different sponsors, spend time with your friends or family, passions, whatever you want to do. Use the free resources that are attached to this podcast. Invest. You know where you're starting. You know where you want to end up. Invest according to a plan. Have a plan in place. Have a schedule in place of how you want to invest, and just rinse and repeat. Just keep on moving, and you'll see that that initial step is, as you mentioned, Peter, is going to be hard. But then as you get that momentum going, you're going to hit your goals faster than you realize. Awesome, Peter. Well, thank you so much. This was super helpful. And I really would request any of you listeners out there that have any questions, want to learn more, go to Passive Income MD, come to us at Viking Capital. We're happy to help you.
Cool. This is fun. Thanks, Robbie.
Thank you.